Listen, everyone, we gotta talk about Nvidia earnings. You know I get excited about this stuff. Fantastic company, and they reported earnings in the after hours yesterday, so we're gonna take a peek at them because the stock's gonna. It looks like it's gonna open at nearly 9.5% up, which is crazy because if you've been following this stock, you know it's been an incredible journey on this one. In the last year, we've seen 100% gain. Quite incredible, right? 117% in the last 5 years. Really, if you look at the since 2019 numbers, the thing's up 759%. It's incredible how this thing's just been popping off as of late, and obviously floating around the 52-week high. Obviously, if you look year to date here, you can see it's basically at its 52-week high after this bump. So kind of crazy to see where this stock's been going as of late, and it's obviously headed in a massive direction. So let's look at these earnings and see why this stock popped so much. Non-GAAP EPS line here of $1.17 beats by 9 cents, and a GAAP EPS of 97 cents is a beat by 11 cents. So, from a profitability standpoint, they beat, which is nice because I think in some companies right now, just given the full breadth of really everything going on with supply chain constraints, especially in the chip industry, you have to consider that profitability has been a concern with a lot of companies, actually. So I think that continued strength is showing pretty well for them. Revenue here came in at $7.1 billion, which is up 50% year over year, which is very nice. It's an increase, or really a beat by $290 million. So way over the estimates by a great margin, great percentage beat too. You'd love to see it. They obviously recorded record data center revenue, which is up 55% year over year, a very much blooming aspect of the business. And gaming revenue up still 42% off of a massive year last year. Gaming revenue continues to grow massively. For guidance, they're expecting revenue to be $7.4 billion, plus or minus 2%. And GAAP and non-gross margins expected to be 65.3 to 67%, plus or minus 50 basis points. Oh yeah. GAAP and non-GAAP operating expenses coming in at $2.02 billion to and $1.43 billion. So quite a wide range of GAAP there. Nothing too crazy. Yeah, I mean, nothing crazy. I mean, I expected to be 11% tax rates. Okay, that's not bad. Let's look at the press release and see some finer details on some of these core business points. What do we want to zoom in? I think that's good enough for you. How's that treating you? Is that all right? You know what? You can take my cookies. You can take my cookies, Nvidia, just not the chocolate chip ones. Those are good. So what can we find out from this? Well, obviously one thing that's worth mentioning here, I think it's one pretty important bullet point here, as I have a dog hair that has floated into my eyeball nearly, and it wasn't feeling good. From here, Jensen Huang, founder and CEO, demand for Nvidia AI is surging, driven by hyperscale and cloud scale-out and broadened adoption of more than 25,000 companies. So that is a massive aspect that is going to continue to blossom in this company too that you need to consider. Now, again, you gotta realize that it's a little bit weird. There's a couple things that companies really go for. When you look a few years back, every company was really focusing on the term AI, and I think Nvidia maybe in the past there, but metaverse is the new thing. So here they're working with Omniverse, okay? It's all about some sort of verse, dude. I'm telling you, what's going on? I don't know what's going on here. So as far as some of the charts, we love seeing them because we get a great comparison. You look quarter over quarter, revenue is still up 9%. We look at the GAAP numbers, and obviously up 50% year over year. Gross margins up on both aspects. You love to see it. Operating expenses did increase on both aspects as well, not a shocker. Obviously, as you sell more, typically cost of the sales will go up. I mean, it's just how it goes. Net income, though, this is a line I like to see. That also increased both quarter-over-quarter and 84% year-over-year, which is pretty significant to see really that blossom in a great way. So, I love seeing it. I love seeing it all. Yeah, as far as highlights, is there anything super crazy? Well, I mean, new software development kits, obviously worth mentioning for AI, tools for developing and deploying large language models. So there's some cool, interesting things to talk about with the highlights here, but this is all available data with the GTC. So in case you were curious, if you want to view this and view their information themselves, there's plenty of opportunities to do that online. Obviously, both in the even in the investor relations page, which is worth looking into. The gaming segment worth mentioning. Record numbers here. So they announced RTX capabilities coming to blockbuster titles, which includes Marvel's Guardians of the Galaxy, which is probably a garbage game, because they all are typically. All those movie games that are for children, they're not good. Battlefield 2042 looks very, very nice, so let's see what that looks like, obviously, and Dying Light 2. So they're working on some, obviously, dynamic games, and God of War here. Dynamic games that need some dynamic lighting, and really graphics capabilities, so we'll see what that looks like for them, and how that works. But obviously that works for them because they're working on getting sales in that aspect, and not only just from selling chips. So there's many other avenues for growth here. As far as data centers are concerned, great stuff. Plans to build an AI supercomputer dedicated to addressing global climate change crisis. I don't know. Titled Earth 2. I don't know what that money is being spent doing, but that's okay. They can do whatever they'd like. That's what gets people in. Okay, it's all about that stuff. That's what people care about nowadays. They don't care about making money for a company. Nothing else crazy in the automotive segment. I like mentioning this one too, because there's some other key aspects here. Revenue was $135 million, up 8%. Obviously, when you talk about autonomous driving, people that use the Nvidia drive Orin here would be pretty cool. So it's going to be used by Kodiak Robotics, Lotus. I mean, these are companies. Who knows? Qcraft and WM Motor. No one knows who these are. Obviously, they're probably more Nikola-like than other companies where they're just completely fake. So keep that in consideration when you talk about these. Are these real partnerships? I'd like to see them hit a real partnership, because these aren't real partnerships. Let's just be clear. Obviously, $135 million is nothing to sneeze at, but these just aren't real partnerships. These are fake companies. I mean, from my understanding, these companies, obviously they don't have real models out, so they're not real companies in that case. So, is that rude? I don't know. That's what I said, so deal with it. Hey, there's a dog behind me. So, let's look at the balance sheet here. Total current assets here. 9 months comparison sitting at $25.8 billion compared to $16 billion. Big increase in the cash position for sure. You can see that. Growing the cash position. Wonder what that's about. Total assets in general at 40.6 compared to 28.7. So massive growth there overall in the balance sheet. And obviously a big boost in profitability helped in that aspect. Mostly from the current assets, obviously, as you need to consider. Current liabilities saw a decline, actually, which is nice, 3.6 to 3.9. But we did see a rise in total liabilities in general, 16.8 to 11.8 though. So shareholder equity rose by a very good margin in the last 9 months, 23.7 compared to 16.83, 8.9 I should say, 8.93. So it's a pretty decent balance sheet. The things are looking good. Now, I think a lot of people might be upset when I say this. I think this stock has got a little bit too electric over the last year. It's absolutely gone crazy. The thing's more than doubled. And obviously with an open today, 9% up beyond that, right near its 52-week high. I think this thing is a little bit overvalued, and maybe some people might think that's crazy. But again, P/E ratio over 100. This thing's trading at a market cap over $730 billion with an annualized revenue last year of $10.9 billion. And again, if they increase that 50%, we're talking about $15 billion. $15 billion of revenue for a market cap of $731 billion. Now, this is a very innovative company. But as far as value, there is not value right now in the stock. I hate to say that. Again, I was lucky enough to get in last year, so we took advantage of that. We really did. In the hundreds, we took advantage of that. I think the stock's just run up a little bit too high for its own britches. Look, I think that's fair to say, and maybe it's rude. But this is a company that's going to continue to do well. You saw, obviously, in 2020, this thing didn't even really dip at all because it's just, hair in the glasses, told you. It's just going bonkers. And for that reason, I'm not a buyer in Nvidia right now, which some people are going to think is crazy. Look, this is a great company. I just think the stock, at $320 a share I think it's a little expensive with a market cap of right around $750 billion right now. I think it's a little expensive for a $15 billion revenue line. That's what I got for you. I hope you had a great one. What am I talking about? I'm losing my mind here. These numbers are inaccurate, okay? Look, this company, let's just look. Let's stop here. This company, of course, this company's bringing in $25 billion. I don't know what I'm talking about. Actually, it's probably going to be closer to, I think they'll probably do $9 billion next quarter. Yeah, I think so. So they're going to be right around $28 billion. It doesn't change the premise. $28 billion with a market cap of over $750 billion. Look, I think it's a little too expensive. $28 billion compared to $750 billion. You just do the math there. That's all I need you to do, and tell me that's not expensive. I mean, when you're getting over 20 times, look, the company deserves great valuation because it's a very innovative company, but I don't know how much that valuation can continue to grow. That's my main point here. Hope you have a great day.